Hello everyone, my name is Adam from Trade with Precision and welcome to today's episode of CMC Markets Technical Insights, and this is for the end of April 2019. So there's just so much to show you. I want to make sure that I do this, but the very first thing that I want to do is just cover a very brief analysis of the global indices and as to reasons to why I'm not looking to trade them. Just looking at them on a monthly basis, we are coming up against all-time highs. This is the Dow, and so very cautious about entering any trades up to that. Overall, the trend does look bullish, but because of the proximity to these all-time highs, I'm very cautious about that. Comparing that to the S&P 500, we've actually broken through and created new highs, and looking at it on the daily basis, the trend itself looks really nice and healthy. The momentum indicators are nice and flat, so overall the quality of the trend is looking really good. It's just that I want to wait until a little bit longer. I'm just going to sit on my hands and wait for that trend to start to break free of those previous highs. Looking at the NASDAQ, also here we go. Momentum indicators are nice and healthy. The quality of these trends is absolutely beautiful. Overall, I'm just cautious of that relationship with the all-time highs. Again, comparing that to non-US indices, even here when we come across to the FTSE, it's also looking nice and bullish coming up. It's still got a bit of room to go to the previous highs. The DAX, the Germany 30, also looking very, very nice, looking potentially like it wants to retrace back into the moving averages on the daily time frame, and so there may well be potential trend flow setups or swing opportunities to go along there. So the point is, all the markets, even here going and comparing it to say the Hang Seng, the Hong Kong 50, nice and bullish. Level of resistance there, I'm just cautious because we are right at these highs, but the point is that the existing trend is looking very nice and bullish, and actually overall very, very healthy. So the implication is that unless something else unexpected happens, my expectation for the near to medium term is for these markets to at least attempt to continue these uptrends, and there's no signs of massive failure on the horizon at all in them. And that's not that it won't show that. It would. The momentum indicators would show exhaustion, the price action would show exhaustion. It's not showing up there. So then, now that I've covered that, that's just my explanation as to why I'm not looking at that and why I'm a little bit more cautious. There are shorter term opportunities, but certainly this is something I'll be revisiting next week. There aren't any immediate opportunities on the horizon anyway with those, so I'll revisit them next week. But for now, what really catches my eye, some really good stuff on commodities. So what I want to do is take you through to cocoa bulk bean, and just having a look at this, also just looking very much liking the look of the overall trend here. So any pullbacks into these previous moving into the level of resistance to test for support, any of these pullbacks into this is a very nice, happy, healthy trend. Lower time frames, so in other words, day trading opportunities, 4 hours going down to 1 hour time frames. Any of these pullbacks into these moving averages also aligning up with support resistance levels here as well would provide me with nice little entry opportunities to the upside, and that's likely to survive another 48 to 72 hours. So those opportunities should continue for a while. I like the look of that. Then moving on to corn. So corn has pulled back into the moving averages, and I just note nice little downtrend, pull back into a level of support and resistance, a strong bearish rejection candle. I'll be looking for a break of the low that is a potential swing trading opportunity or trend flow opportunity to the downside, with my stop loss above the high or above the previous highs here, but actually using the inherent support resistance levels as stop loss protection. And then looking, of course, I'll be planning on taking one-to-one profit to make sure that I can get my trade to break even and risk manage my trade as quickly as possible. Then moving on to coffee robusta, very nice, just an overall beautiful trend. What I am noticing though is that the candles at the swing lows are becoming progressively more bullish, strong rejections there. Although the momentum indicators are just flat and not divergent, this is the kind of behavior that generally results in a change in trend, but there's a very nice bearish candle setting up in the moving averages. The overall structure of the chart is exactly what I'm usually looking for, and a nice small bearish candle, a break of the low of which provides me with some entry opportunities. But I am aware of this behavior here. This is usually what is accompanied by divergence and usually results in a change in trend, or at least a deeper retracement, a weekly retracement. For the time being, I'm certainly going to consider this as a trading opportunity. Looking at crude oil Brent, and this is also going to follow through onto the others, gasoline, natural gas as well. Prices pull back. It has set it up. The MACD and RSI seem to be relatively happy, and so that does appear to be a potential, off that level of support, a potential trend flow opportunity to the upside. Okay, so I've got that, then gasoline as well. Just beautiful trends. I mean, just absolutely amazing for these trending opportunities. Prices pull back into the moving averages, and I'll be looking for a potential opportunity here. I can see the MACD is starting to go a little bit flat. RSI as well starting to drop a little, so we are close to a significant level and around number 2200, and a bit of divergence starting to creep in, so extra cautious on this one because it may actually start and then fail or reject quite strong on that. So this is certainly in the area where it is going to be that last one or two trades before it decides to change direction. The risk is slightly higher on that one. I'm a little bit more cautious. Also, just wanting to show you a very nice chart that I really like the look of this as well. This is natural gas, very nice downtrend. I'm looking for a small bearish candle in the moving averages to occur over the next 1 to 2 candles. That's the next 1 to 2 days. Let's call it the next 48 hours. Looking for that as an entry short. And overall here, these indicators seem nice and happy and healthy with this trend, and it's a great trend. It's not a very strong bearish sort of momentum, but it's a very nice quality downtrend, so I do quite like that. And then moving on to orange juice. Orange juice overall is just, again, another very, very nice downtrend. But this is the daily, and here is where I'll be looking for entry opportunities, smaller trend for opportunities on the lower time frames. Because of that great quality trend, the lower time frames are likely to offer that. I will be keeping an eye out for divergence, but even here we've had some breakouts. This is a nice little momentum breakout there on the much lower time frames. I'll be keeping an eye out on that for potential entries on, say, the 4-hourly time frame. And again, because we haven't come down to this key level, which is here around the 98 level, we've still got a little bit of room, and especially if price retraces back up into testing this level of support for resistance on the lower time frames over the next 48 hours, there should well be some good opportunities there, so I'll be keeping an eye out for that. And really like to look overall of quite a few of these. Then there is as well, now moving on to currencies. So there's a couple of currencies that I quite like the look of. Predominantly the US dollar is now broken. That dollar index is broken through 97, headed up towards 98, and is retracing. So again, here on euro dollar, price is now pulling back into a level of true support, and I'll be looking over the next 1 to 3 candles for a nice bearish rejection candle there. That also happens to overlap with a 618 Fibonacci retracement, so pulling back into level of support that could be potential resistance, pulling back into a 618 resistance level, as well as the sell zone, that area around the moving averages. A nice bearish candle there could provide me with an entry opportunity in the middle of the week as price breaks the low of that and continues its trend to the downside. That is definitely one I'll be having a look at, and ideally a nice small rejection candle there. Also, by placing my stop loss above the high or above that level of support and resistance, I get that additional technical stop loss protection. And then the other one that I really do like the look of is Kiwi dollar. The quality of this downtrend is very, very nice. Price is now pulling back into the moving averages, into the sell zone. The momentum indicators are nice. This is probably my favorite of the lot. I'll be looking for any swing highs here, which is even potentially over the next 24 hours, but certainly over the next 48 hours, looking for bearish candle in this area as my entry opportunity on the break of the low of that, with my stop loss above the high, to resume this trend to the downside, and ideally looking to get 1-to-1, get break even as quickly as possible, and then looking to take profit after that with a trailing stop loss. So that's everything on my watch list, and just explaining why I'm not really looking at the global indices just yet, but my focus is certainly on these two currency pairs, as well as several of those commodities, and that's over the next 48 hours, or at least over the next 1 to 3 daily candles, and a couple of those were on the lower time frames. I want to wish you a wonderful week, and talk to you soon. Thank you. Goodbye.